Hello traders, this is Rich Dare from Tradesight. This is the market preview for the coming session. This is going to be for May 7th, 2013. It's going to be for this coming Tuesday. We had a session here today which was positive, but while it was positive, it was fairly unimpressive for a couple of reasons. The ES futures were higher on the day by 5 handles. The Nasdaq futures were higher by 12, but the Dow, which is one of the other broad market measures, was really struggling and really couldn't get into gear today. The advanced declines were positive, but not impressive. We're plus 600 issues on New York and plus 400 on Nasdaq. The VIX was lower on the day at the settlement by about 19 cents, but it was really higher for most of the day and really only gave ground really after traders came back after lunch and just didn't come in to sell, but rather just kind of stepped aside. So we had an up day, but it really didn't move the needle as far as the market internals go. But it is something that the bulls can build on if they so choose. So let's take a look at the big charts now. Let's first take a look at the ES futures. All right, here's a look at the ES futures. The ES futures did make a new high close on the move. And also, in so doing, did make a new intraday high, which is really the key thing. The key thing about making the new intraday high is that, in so doing, we've now let me zoom down here a little bit, see if this is going to be invalidated. This seeker sell signal. We closed right at the pressure threshold. Now we've broken above the high of the day by at least 1 tick or more. So this is going to invalidate that seeker exhaustion. So now we're going to be into the mode where we're now we have a broken exhaustion signal in place. You see how the line is dashed now off of the seeker exhaustion. So what we've got now is we've got a failed signal. We thought this signal was suspect to begin with just because the 1 was here and the 13 had virtually no extension to the upside. So we've got a broken signal to the upside, which really effectively puts this 8 ace level at 1625 in play. So next level to the upside is going to be 8 ace at 1625. To the downside is going to be the gap from last week, 1593.75, which is the GAM level just below at the 7 ace level. So that's definitely the ranges and the in the near term technicals to be aware of. Also note that to the downside, we've got this rising 10 EMA that we're still above. So while the seeker signal has been broken, we never even activated it from an exhaustion warning status, which is what we have until we close and follow through below the 10 EMA. So right now, no harm, no foul. This is broken. The signal is now definitely invalid, even if we roll down below the 10 EMA. And we're just going to have to trade this 1 candle at a time until we get a resolution of this little range and take care of that gap that we left below from that non-farm number on Friday. All right, now we're going to turn our attention to the Nasdaq side. Here's the NQ side. The NQ has really started to develop some relative strength. We did print a new high. We've got a new high close on the move. We did go 9 bars up as of Friday, but really haven't gotten any reaction from it yet. The big levels that are going to be in play are going to be 8 ace level at call it 29.69 if you will, because that's a nearby round number. And the to the downside, the obvious level is going to be Friday's low, which is going to be the beginning of the gap window from the non-farm number all the way down to the previous settlement, which is coming in about 28.99 or so. So that's going to be really key here. So we just have to let this play out. We got 8 ace above, which is really key, and then to the downside, that gap window from the non-farm number. The trend remains positive. We're still solidly above the 10 EMA, but for the first time in a while, really the first time this year, we're starting to get some distance above the 10 EMA. You can even see it here in the MACD that we're starting to get the first signs of being a little bit near-term overbought here in the market. All right, folks. Internally, the market's still okay. Here's a look at the 10-day trend. The 10-day trend is at 1.05, so we're neither bought nor neither oversold, and we're really pretty much right in the midpoint here of the range. So if the bulls want to use this to their advantage, they can. There's plenty of gas in the tank before we get overbought, according to the 10-day trend. Also importantly, the cumulative advanced decline line on the New York side remains positive. We even though the net advanced declines were fairly skinny today, we did make a new high on this move. So this is definitely positive for the market, and really sets the table for the potential for more highs if the bulls continue to keep their wallets open. The advanced declines on the Nasdaq side have recouped this drop and this break of the trend line, and have actually made a new high on the move. But we'll mention that we're only basically back up in the area of the prior high here on the Nasdaq side of the market. So really need another day to follow through and get back up and above this trend line for this to really prove itself. I think the other key chart here is the NDX versus the S&P. So that would be the broad market versus the Nasdaq. When the ratio is rising, that shows relative strength in the Nasdaq side versus the broad market. We've really started to see that come on, with Apple starting to really perform better. Apple's headed back to the upside here. We're definitely seeing the improvement in the overall NDX. So perhaps Apple is lifting the tide for all boats here in the Nasdaq sector. We're definitely seeing some better trading and some better relative strength in the Nasdaq side, and that would definitely be very positive since it's underperformed all year so far, and that we can see some rotation out of some of these primary broad market stocks that are really pretty well overbought and pretty much very fully invested. And don't get me wrong, fully invested doesn't mean they can't go higher. When we talk about that, that just means that they've already attracted a lot of capital this year and have already gotten to what is at least your typical price earnings ratios. All right, here's a look at the individual sectors. I'm going to rank these from best to worst on a relative basis today. Airlines were top gun. The BKX came on today, which definitely outperformed the broad market. And looking a little further down the list, the OSX was kind of mid-range on the day here. Real laggers were the utilities, the drugs, the more defensive stuff, the consumer staples and whatnot. BTK is definitely still feeling the rotation. The BTK is kind of a source of funds right now for things moving into the more aggressive things like the stocks and whatnot. So that's definitely happening. Here's a look at the multi-sector daily chart. You can see the XAU was just kind of hanging around with a little bit of a bounce. The semiconductors and the banks performed fairly well, but the BTK, which is the red line, actually was a little bit lower on the day, showing some distribution. So they're definitely rotating within the growth sectors. So while the averages, we're moving up a little bit today, not all of the sectors were all that healthy. And we're definitely starting to see some rotation here, just because the money in hand is already fairly well invested, and until we see some money come out of the bond market, things are going to be a little bit slow here. We already saw the money come out of the defensive-minded XAU and really kind of fueled this last push up here. You can see the SOX here is really fairly coincident with this turn down here in the XAU, and it really started to perform better as they continue to liquidate that. But let's take a moment here and take a look at some of these the key sector chart. Here's the XAU, which was flat on the day. Just the reason I bring this up is just because of the energy that's wound up in this pattern now. It's been very, very flat now. Did dunk down to this zero waste level at 100 and held it. Bounced back up a little bit, but really hasn't done anything to develop any momentum. You can see how it's just kind of hanging around the 10 EMA, and the 10 EMA is flat, which really just kind of indicates any absence of any real trend in it. The BTK was fairly weak on the day. The 13 exhaustion from the seeker is still active. We didn't close above the risk line here yet, or even really challenge it yet. Today's session was basically inside the previous day's session. We dunked a little bit lower, but it's still essentially inside of the session from Friday. The BKX was really the one standout on the day. Pivoted higher and broke above the static trend line that had been grinding under back here. And also back here, that's the screen level from our 1 through 9 countdown phase, and it's just starting to break back above that. Key level is just overhead at this 2/8 level. The plus 2/8 level is that last area of resistance in the Murray math box. 57.81 is going to be really key. If it breaks above that on a closing basis, it's going to frame shift the box to the upside and give a little room to breathe. Last sector I wanted to take a look at was the SOX. The SOX made a new high close on the move. It closed right in the area of the plus 2/8 level. So if we get just a little bit more of a push to the upside, we will frame shift this to the upside here, and give this thing a little bit more breathing room to the upside. Note that the MACD is positive, and this has definitely been leading the SOX. I'm sure from the relative positive performance from Apple and whatnot. All right, folks. Well, as always, thanks for listening, and this has been Rich for Tradesight.